This is Ron Bell from Coldwell Bankers Select. We're filming out of the McCarran office today, and actually a friend of mine, and frankly my mortgage broker, my personal mortgage broker, and many of the ones from my clients, Aaron Dehart, dropped into the office today to talk about a particular program that I personally am interested in, and he's going to share with us today, for all you folks out there, this new FHA Back to Work program. Aaron, come on in.
You bet.
Nice to see you.
Nice to see you.
Hey, Ben, grab a seat, please.
Thank you.
Oh, where to start? Why don't you give us some bullet points
You bet.
and brief us on the program, and I'll ask you a few questions.
Basically, about 2 weeks ago, FHA came out with some new guidelines on their new changes for a typical FHA loan. Typically in the past, if someone's experienced some kinds of hardship, whether it be a foreclosure, bankruptcy, or a short sale, the time allotment for that healing period for you to be able to get a new FHA insured mortgage has been anywhere from 2 to 3 years. Recently, FHA's came out with a new program that they call FHA Back to Work program, which has taken that time frame from the typical 2 to 3 years down to 12 months. So you could have had a bankruptcy 12 months ago, a short sale 12 months ago, or even a foreclosure 12 months ago, and you could possibly qualify for this new program. It's called the FHA Back to Work program. Here's some key features that I really want to stress up front about this. First and foremost, this is not going to be a program for someone that did a strategic default just to take advantage of the market. That's not what they're looking for. What FHA is looking for is someone that had some kind of event that happened due to the downturn in the economy, whether it was a job loss, things of that nature that caused them to be in a position where they could no longer make their payments, or they were in that position. So some of the major key points that I really want to point out about this program is, first and foremost, they want any borrower that's going to be on the loan application to have a minimum of a 620 middle FICO score. Very important. That's not a 619, not a 618. You got to have at least a minimum 620. Another big point that we need to really discuss on this program is you need to show that you've had at least a 20% reduction in household income, and you're going to have to be able to prove that. Whether it's a couple of years in the past of tax returns and now matching them up with what's happened in the past year, we need to show that there's been at least a 20% reduction in overall gross income in the family. You must have perfect credit within the last 12 months. So for example, if you had a foreclosure that happened 12 months ago, we want to see 12 months of on-time payments since that time. So 12 months of paying your visa on time, 12 months of paying your car payment on time. This isn't going to be a program for someone that had a foreclosure or a short sale and they've paid their Visa card payment a couple times late. That's automatically going to be a disqualifying factor for this. Another thing I want to point out, this is going to be what we call a super full documentation loan. So you're going to have to provide documentation, not only letters of explanation, pay stubs possibly from over a year ago, W-2s, tax returns, things of that nature. So be really prepared to do some diligent work and get that paperwork together in regards to that. Great program. I think it's a possibility out there to be able to help quite a lot of few folks who just might have fallen on some hard times and unfortunately had to do a short sale or foreclosure, or even have to do a Chapter 7 bankruptcy. So great program. Just FHA has come out with this announcement about 2 weeks ago, a little bit more than 2 weeks ago. My mortgage bank that I work for, Summit Funding, we're going to be one of the few direct lenders that are able to do this program. So if this is something you think you might fall into the category of this, and this happened to you, please feel free to give me and my team a call. We can be reached at 775-824-3640. And you can also check out our website, our mortgage blog, which is www.thenevadamortgagereports.com. And we've got a lot of information on there about that. So give us a call. We'd love to answer any questions you have on this program or any other program. So absolutely.
Can you answer a few questions for me?
Sure,
real quick?
I will do my best.
The 20% income, you're talking about from the time of the event, the bankruptcy or short sale, or 20% increase in the last year?
20% decrease. So at the time of the event, we want to see within a 6-month period of either before or after when this event happened that there was a 20% reduction in income.
Okay.
So for example, perfect example, we have a husband and wife, and the gross income between the husband and wife for that family is $100,000. Husband loses his job, and now the gross income has decreased to $65,000. That's an example of something that might possibly fit into this category. Now the husband's gone back to work, things of that nature. But we need to show that there was at least a 20% reduction in income within 6 months of that event happening.
All right. So two-part question on the FICO.
Sure.
It's a 620 FICO. I assume that's blended. All three bureaus.
Correct,
blended.
yes.
Okay.
We're going to take the middle score, throw out the high score, throw out the low score. We want to see the middle score from a three-bureau credit report
Okay.
of at least a 620.
Got it. And just because it's 620 FICO, let's say, for example, Summit, will you guys underwrite a 620, or are you guys going to pad that a little bit and say go to 640 or so?
No, Summit Funding, we are what's called a direct Ginnie Mae seller servicer. So what that means is we get to underwrite to directly on what the FHA guidelines are. FHA allows us to do that. We service our own loans. What that means is we don't sell a lot of our loans on the secondary market. So Summit Funding does a loan for someone. The majority of the time, that person ends up making their monthly payments to Summit Funding. So we also service that loan. So that's why FHA has allowed us to participate in this program.
Does FHA weigh a short sale versus a deed in lieu versus a foreclosure any heavier one way or another in this program?
Nope, they're going to look at each one the exact same time frame. If it's a deed in lieu of, a short sale, a foreclosure, or bankruptcy, it's going to be the 12-month rule. I do want to point out it's going to be what's called a manual underwrite, so they are going to be a little bit more strict
Right.
on debt to income ratios. We don't want to see any more than 43% of that family's gross household income going towards all their monthly revolving debts. So
Okay.
house payment, car payments, any credit cards that report on a regular monthly revolving cycle like that is what we're going to look for.
Okay. And just to recap, this is actually called the FHA Back to Work Program.
That's the name of it, the FHA Back to Work Program.
Well, you heard it here. Anything else you want to add?
No, great program. I just don't think the public knows a lot about it. I think there's a lot of people out there that would probably fit into this category, so we decided to make this video to help the public out and make you aware of it. So again, feel free to give us a call at 824-3640.
Okay, I'm going to go ahead and sign off. My name's Ron Bell, Realtor.com, 775-750-5256. This was filmed in September of 2013. What are the current interest rates on FHA right now?
Current interest rates, someone's got good credit, you're going to be probably anywhere between 4.5% up to 4.75%, depending on the market and what time you're looking at.
Any chance of these things coming back down, or are we just kind of in a stable to upward?
I think we're in it's, whenever you see rates go up, they're going to go up more quickly, unfortunately, than they do go back down. Good news is rates are still under 5%. They're still at historic lows. It's still a fantastic time to buy a home and get into a home. Interest rates are fantastic.
We went from 1800s levels to 1930s level, right?
Correct.
What's the big deal? Thank you very much, Aaron.
My pleasure. Thank
Bye-bye.
you, Ron.